What if I told you that one man, starting from nothing, went on to build the world's largest hedge fund, managing over 150 billion and shaping the way the richest investors think about money? This is the story of Ray Dalio, the man who revolutionized investing, predicted multiple financial crashes, and built Bridgewater Associates, one of the most powerful hedge funds in history. But his journey, it was anything but easy. Before he became one of the greatest investors of all time, before he managed over 150 billion at Bridgewater, and before his insights shaped the way billionaires think about money, Ray Dalio was just a kid from Queens. Let me take you back to where it started. Born in 1949, Ray Dalio grew up in a typical middle-class household. His father, Marino Dalio, was a professional jazz musician who played the clarinet and saxophone, filling their small apartment with the smooth sounds of big band music. His mother, Anne, was a homemaker, raising Ray with a strong sense of curiosity and independence. From an early age, Dalio was fascinated by the world beyond his neighborhood. He was never the type to simply accept what he was told. He always wanted to dig deeper to understand why things worked the way they did. His first real exposure to wealth came when he started working as a caddy at the local golf course. He wasn't just carrying clubs, he was listening. Businessmen, stockbrokers, and investors would discuss markets, deals, and investments while they played. And young Ray absorbed every word. That's when he had an idea. If these men were making money in the stock market, why couldn't he? At just 12 years old, Ray Dalio took his entire savings, $300 from caddying, and made his first ever trade. He bought shares of a struggling airline, Northeast Airlines, after overhearing a conversation that suggested the company might turn around.
I took my caddying money and I decided I would invest. I didn't know what I was doing. First stock I bought was a company which was the only company I ever heard of that was selling for less than $5 a share. That was my criteria.
Within months, the stock tripled in value. Young Ray had just turned $300 into nearly $1,000, a small fortune for a kid at his age.
But I got lucky. The first company I bought was a company that was about to go broke, but somebody acquired it and it tripled. And I thought this game is easy, so I got hooked.
That single trade changed his life forever. The thrill of investing, the idea that he could turn money into more money, fascinated him. He was hooked. Unlike most kids his age, Dalio wasn't just reading about the stock market, he was actively studying it, trying to figure out how it worked. Through trial and error, he learned that the stock market wasn't just about luck, it was about patterns, cycles, and human psychology. Dalio's hunger for knowledge led him to Long Island University, where he studied finance and economics. But his real education wasn't happening in classrooms, it was happening in the real world. By the time he reached college, he was already trading stocks, commodities, and even experimenting with futures contracts, far beyond what most students understood. Even then, Dalio had a unique way of thinking. Instead of following what everybody else was doing, he questioned everything. He wanted to understand the deeper mechanics of how economies worked, which would later become his greatest strength. After Harvard, Dalio landed a job on Wall Street where he finally saw how the biggest players in finance operated, but it wouldn't take long before he realized he didn't want to work for somebody else. He had his own ideas and he was willing to risk everything to prove them. And that is where the real journey begins. Ray Dalio's fascination with the financial world only intensified in college. At Long Island University, he wasn't just studying finance, he was living it. While his professors were teaching theoretical models, Dalio was busy applying what he learnt in real time. He became obsessed with understanding the forces that moved economies, the rise and fall of commodity prices, the roles of interest rates, and the hidden patterns behind inflation cycles. Dalio believed the financial markets weren't random, they followed patterns. He studied historical economies, booms and busts, convinced that the past could predict the future. It was a radical idea at the time, but it would become the foundation of his legendary investment strategies. After graduating, he set his sights even higher, attending Harvard Business School, one of the most elite finance programs in the world. But Dalio wasn't just another student trying to land a high-paying Wall Street job. He was already thinking about how to reshape the entire industry. He wasn't afraid to challenge conventional thinking, sometimes to the frustration of his professors and peers, but his hunger for knowledge and unconventional approach to the markets made him stand out. Dalio had a breakthrough. He realized that by studying global macroeconomic trends, he could predict market movements before they happened. He was about to enter the finance world with a radical new vision, but Wall Street just wasn't ready for him yet. Fresh out of Harvard, Dalio landed a job at a major investment firm, Shearson, Hayden Stone, one of the most prestigious names in finance at the time.
As respected advisors to the serious investor, we at Shearson American Express recommend you invest your time before you invest your money. Shearson American Express and the serious investor.
It was the perfect launch pad for an ambitious young trader. But there was just one problem. Ray had a mind of his own. While most traders followed the status quo, Dalio questioned everything. He challenged authority, made bold predictions, and refused to accept traditional Wall Street wisdom. His bosses thought he was too radical, too opinionated, too unpredictable. They wanted someone who would follow the rules, not rewrite them. Eventually, the tensions boiled over.
I am still your boss, and I am telling you now, you sell half those contracts. Do I make myself clear? Do I make myself clear? Shut the f*** up!
In 1975, Dalio was fired. Most people would have been devastated, but Ray, he saw it as an opportunity. At just 26 years old, with no job, no office, and barely any money, Ray Dalio decided to start his own firm. He named it Bridgewater Associates, working out of his small two-bedroom apartment in Manhattan. At first, Bridgewater wasn't a hedge fund. It was just Dalio giving financial advice to a few clients, mainly small businesses and investors who were willing to listen to his unconventional ideas. He started writing deeply researched reports about global economic trends, sharing insights that no one else was paying attention to. His early research caught the attention of a few big clients, including McDonald's, who hired him to help them manage financial risks in the commodities market. It was a huge win. Dalio had just secured his first major corporate client, proving that even a small-time advisor, he could compete with the Wall Street's biggest firms. Dalio's obsession with macro trends and cause and effect relationships led him to create his own unique investment approach, one that would later make Bridgewater one of the most successful hedge funds in the world. As Bridgewater grew, Dalio realized something. Traditional corporate structures were broken. Too often, businesses failed because people were afraid to challenge bad ideas. He wanted to build a firm based on truth, honesty, and intellectual rigor. Dalio introduced a radical new culture at Bridgewater, one where no idea was sacred. Employees were expected to challenge each other openly, debate decisions, and focus on finding the absolute truth, no matter how uncomfortable it was. He called it radical transparency. It was a bold, ruthless, and incredibly effective way to run a business, and it became the foundation of Bridgewater's success. From that tiny apartment in 1975, Bridgewater grew into a powerhouse, eventually becoming the largest hedge fund in the world. But Dalio's journey was far from over. His biggest test and his greatest triumph was still ahead. Ray Dalio's deep understanding of global macroeconomics had begun to pay off. His hedge fund, Bridgewater Associates, was slowly gaining recognition as a serious player in the investment world. He had made a name for himself by correctly analyzing commodity cycles, interest rate movements, and economic shifts that others overlooked. Dalio believed that the economy worked in predictable cycles, patterns that repeated throughout history, and based on everything he was analyzing, he saw something coming that no one else did. He was convinced that a major economic debt crisis was on the horizon. He told his clients to prepare for a massive market collapse in 1982. He was dead wrong. The crash he predicted never happened. Instead, the economy kept booming, and his bold, all-in bet against the market left him completely wiped out.
There will come a time that you are going to have a terrible situation, and how you reflect on that situation, and whether you have a metamorphosis, a change, a personal change. Me, in my case, happened in 1982.
The mistake cost him everything. Every single employee at Bridgewater had to be let go. The firm was left with no money, no clients, and no credibility. But instead of giving up, Ray did something that would define the rest of his life. He studied his own mistakes.
It was one of the most painful experiences of my life, but it turned out to be one of the greatest experiences of my life because it changed my attitude about decision making, which led me to realize that pain plus reflection equals progress.
This moment changed him forever. He realized that no matter how smart you are, you will always be wrong sometimes. The key wasn't to avoid mistakes, it was to learn from them. Question everything. Embrace failure as a teacher. Find the truth, not what you want to be true. Dalio rebuilt Bridgewater from scratch, but this time he didn't just focus on market predictions. He focused on decision making itself. He introduced a radical new culture at Bridgewater, radical transparency. Every idea had to be debated, tested, and challenged. Every decision had to be based on data and logic, not emotions or ego.
Real idea meritocracy, in which the goals are meaningful work and meaningful relationships.
He turned investing into science, and it worked. By the 1990s, Bridgewater was one of the fastest growing hedge funds in the world. By the mid-2000s, the world was celebrating an unstoppable economy. The US housing market was booming. Banks were handing out mortgages to anyone with a pulse, and Wall Street was blinded by greed. Dalio saw the warning signs. Debt was piling up at an unsustainable level, and the entire system was on the verge of collapse. Then it happened. The 2008 financial crisis, wiping out trillions in global wealth. Lehman Brothers collapsed. Banks begged for bailouts. The world was in a freefall. While most of Wall Street collapsed, Dalio's Bridgewater Associates was making billions. His principle-driven systems worked. Dalio had learned the ultimate lesson. Success isn't about being right all the time. It's about having a system that helps you survive when you're wrong. And that is how Ray Dalio turned failure into the biggest comeback in hedge fund history. After decades of market dominance, after managing over $150 billion, after making and losing fortunes, Ray Dalio realized something. It was no longer just about money, it was about teaching. For years, Dalio had been writing down rules for decision-making, investing, and life itself. He didn't just want to remember what worked, he wanted to build a system that anybody could use. So in 2017, Dalio published Principles, Life and Work, a book that would go on to become a global bestseller, breaking down his philosophies on decision-making, investing and success. It wasn't just a book, it was a blueprint for how to think, how to solve problems, and how to build a life success, discipline and resilience. But what exactly were these principles? At their core, Dalio believed that every mistake, every failure, every setback was an opportunity to improve. His mantra, pain plus reflection equals progress. At Bridgewater, Dalio built a culture based on radical transparency, a system where every idea is challenged, every weakness is exposed, and every decision is based on truth, not ego. In most companies, employees fear speaking up. At Bridgewater, everyone is expected to challenge ideas, even Ray Dalio himself. Dalio didn't just teach people how to invest, he taught them how to think. He believed that investing was like chess. Every move you make should be based on probabilities, patterns, and historical data. One of his core philosophies? Don't focus on being right. Focus on increasing your chances of being right. At Bridgewater, every investment was tested against millions of data points, ensuring decisions weren't based on gut feeling, but on historical patterns and logic. After nearly 5 decades, Ray Dalio stepped down as co-chief investment officer of Bridgewater Associates in 2022, officially handing over the firm to a new generation. But Dalio wasn't retiring. Far from it, his mission had only just begun. Now Dalio focuses on giving back, mentoring young entrepreneurs, advising governments, and using his vast wealth to tackle global economic issues. So what can we learn from Ray Dalio? If you want to think like him, here's what you need to remember. Pain plus reflection equals progress. Learn from mistakes instead of fearing them. Truth is more important than ego. Seek honest feedback even when it hurts. Decisions should be based on probabilities, not emotions. Think in terms of risk versus reward. Always study history, it repeats itself. Look at past cycles to predict the future. If you enjoyed this trading documentary and you want to find out more, then check out this documentary about Steve Diggle. Steve Diggle turned 4 million into 4 billion. Check his journey out and how he mastered the markets through volatility. Dalio didn't just predict market trends, he built a system to thrive in uncertainty. The question is, will you? If you found this story inspiring, make sure to like, subscribe, and hit that notification bell. More legendary investor breakdowns are coming to this channel soon.